TGIF and GDP face it's a place where pros come to get an edge. How are all my pro warriors doing out there? Hope everyone had a good week. So GDP is going to be the feature today. I heard numbers 4.8, a couple of 5s out there. Donald said it could be 5. Maybe he's got some inside info. Hi, Paul. How are you? And so, you know, you would think the dollar is rallying into it, right? You know, we've had a couple of interesting stop hunts in the last 2 weeks. So last week they took out these double tops, right, and failed. And this week we didn't make new lows, but we took out this low. And perhaps earlier in the week it looked like, you know, maybe we have a breakdown, but it almost mimicked what it did last week at the highs, not by as many pips. So actually, if risk on is going to continue for a little while longer, and say David Brady is right, we need to make a new all-time high, that's at least another 40 handles here. I think the possibility of it doing that, a better backdrop would be this being a failing rally in the dollar. So I want to see how much runway or what type of strength comes in after a good reading. I'm looking to fade it, being wrong over this stop hunt. And the other scenarios, we're just going to 96, 97 to just complete the sideways consolidation. Steve has a very nice triangle line here. But going into the number, I'm going to give last week's high the doubt, you know, give it the heaviest weight until they could disprove it, because this is a lot, this was more critical, a lot more positioning on this double top that got taken out, elected, you know, these people that were short, if they didn't take profits along the way, wherever they were selling it, they probably had stops over 53, 54, and you know, it rallied 10 pips above it, and the candle never closed above it. So don't put your stops where everyone else does. You know, people say, Dale, how do you know where the stops are? I'll say, well, why don't you pretend you're short? Where would you put your stop? And then they said, what's going on with Twitter? Do you have an insight on that? I'm not sure what you're talking about, but they turn around, they're out, they go, oh, wow, it broke out over a double top. I thought that, you know, it had a chance to break out if it did it, but it didn't do it. So, you know, within the same 4-hour candle, even 1-hour candle, the market's underneath their stop. So when you have keys like this, key double top action here, just my advice, and maybe you'll have to reduce leverage to do it. You know, if you were bearish a dollar up here or in here and you put your stop here, give it 30, 40 pips tolerance over levels like this. Because I've noticed, oh, it's down, oh, okay, it's down 15%. Yeah, you know, the big dogs are blowing up, aren't they? So everyone get the point. Don't put it right a pip above the high, okay? On Fibonacci's, I think within Steve's course or Blake's course, Blake does a lot, you know, the whole team are doing video courses. And Carlos, is that you, my friend, from many years ago in New York or North Carolina? How are you, buddy? Yeah, nice to see you. So, you know, these guys are good. Blake does a lot, you know, he likes confluence of fibs and everything. So you may want to wait for the video store to open. Any idea, Steve, when it's going to open? Next month? Okay, well, I'll ask him when he's here with me. But
Sorry,
really,
Coach.
the lesson being, don't put your stop 1-2 pips over swing highs. Go ahead, buddy.
Sorry, I was on the phone. What did you ask me?
You know, someone's asking where they could learn about Fibonacci's, and I said that we have a bunch of our courses coming out soon.
That's
And
true.
Blake does a lot with confluence of different fib levels from different waves. So
That's correct.
I was wondering when you guys were planning to open the video store, next month, month after.
We'll try to release it by the end of August, actually, if vacation stuff don't affect the plan.
Yeah.
Otherwise, September.
Okay. All right, buddy. All right. So I think I've said all I said, Steve. I think that we're going to get we get a stiff number. I want to see how much the dollar has in it. And the only other thing I'm looking at it may be next week, but I think we're starting to set up about that.
I think today's GDP is definitely going to give the tone for what's coming. The week ahead as well from a technical perspective, at least for the dollar, it should. Next week we have several stuff. BOJ, for example, we have, if I remember, we have the interest rate decision from BOJ next week. Not that I expect that to be much of a game changer. We have Canadian GDP that's also coming next week, so that's definitely that will definitely affect the CAD. We have some PMI data, inflation from UK, if I'm not mistaken, stuff like that. PMIs, we have some other PMIs. But generally, we have a decent amount of data next week as well. But I think that GDP, this week, today, actually in a few minutes, in 25 minutes, whatever it is, it's going to be quite important, especially if we get some kind of a big number one way or the other. I mean, something that the market doesn't expect. So, might be the catalyst to finally see the markets, moving once again, because we've spent a decent amount of time more or less consolidating. Of course, it's also the summer trading, that plays a role in that. But it's also that, the market has given a lot of focus, a lot of attention to expectations for the US GDP. So let's see what we get, and let's see how the market reacts to it.
Yeah, I like kind of what's setting up here in US dollar yen.
Somebody was asking you about Twitter before. Twitter after hours is 20% down. Before
what, 20?
20% down, roughly 20% down. Yeah.
Wow.
Basically, the earnings were okay, but the active users number actually dropped, I think. So basically, it's way below what they expected.
It's not in the NASDAQ 100, is it? Because NASDAQ 100's up based upon Amazon had decent numbers. I don't think it's at new highs, but
Microsoft also had decent numbers.
So I wonder why the NASDAQ's only up 11 with that happening. That's kind of weak. It's kind of showing a little market tell of being the relative weakness now, isn't it?
One thing is for sure, we are hitting new highs in the NASDAQ. The Russell is flirting with new highs, and we're talking about all-time highs, of course. The S&P is also flirting with new all-time highs, but for sure, momentum, the breadth of the market, and the underlying sentiment is definitely so much different than what we had at the end of January, right, Coach? I mean, just remember the
euphoria.
Yeah, you remember. I mean, I think it was unprecedented euphoria. For example, if I remember right, the DSI hit highs that we had never seen before.
98, I think.
96, 97, something like that, which is like, I think it was unprecedented. So, definitely, although some of the indices are already at new all-time highs, and the rest are just flirting with them, it's a totally different story. So I think, you know, the market is quite more cautious. Of course, somebody can say that, you know, being cautious, the market can keep pushing higher because, you know, there are still skeptics in the market. But, you know, as I said, you know, this rally doesn't look that healthy to me.
Yeah, and you know what else? We're at new all-time highs in NASDAQ, almost there in S&Ps. And look at this VIX chart. It's really, even though it's cheap, it's not as cheap. It's almost like this 12 level, which was resistance for a long time between 11 and 12, is acting as a pretty good support level.
Yeah.
So unless they could crush the VIX and the market keeps going up, in fact, last time in January, Steve, there were a few days the market was up and the VIX was up. That was really, you know,
weird.
that was like blowing the trumpet, huh?
Yeah, that's something that you don't see often.
Yeah.
I mean, yeah, exactly.
Maybe we'll see that again here.
We'll find out.
Let's watch for that. Warriors, Eagles.
By the way, I'm just about to.
Our Lions.
But by the way, I'm just about to confirm. Yeah, we have Grega with us. So yeah, Grega is going to be with us today. So people, you know, we'll also.
Because I had 2 hours sleep. I'm like you today. I'm like you today. All right. You and Grega can talk all you want. All right, I'm through. I'll be back for the interview. We have Moon Man, Norm Winsky, in honor of the eclipse.
Stelio, anything you want to say from a macro perspective? And Grega, if you are here, tell me, because since we have GDP data, perhaps you can start giving us some of your views before we get the GDP, and then we can cover together, you know, the market's reaction to the GDP data. So let me know if you're already listening in. I see that you're on the webinar, but I'm not sure if you're.
You know, Steve, if you don't have any clouds, what's the sky look to you like today? Cloudy? Clear?
That's an actual question, or you're implying something? Sorry.
No.
No, it's a rainy day today here. It's not raining yet, but it will rain.
Okay. Otherwise, you could have watched the total lunar eclipse, and it's fun with a glass of wine and a little Pink Floyd with your family.
Okay.
Just, you know, one of my.
It's
romantic. You may want to save it for a day you might have with Blake, but it's very romantic. Joe, sorry, buddy. All right.
Yes, I'm here.
Yeah, welcome. How are you?
Welcome. I'm fine. How are you? I know that you had some difficult times now in Greece with fires and so on.
We did some very difficult times, actually. You're on vacation.
And you were jumping off waterfalls, Grega.
Yes,
exactly.
Oh my God, buddy.
I was alone with my wife for 3 days after 12 months, and you can imagine this is a real vacation, you know, when you can do whatever you want. So we were going to canoeing. This is actually waterfall sliding. Okay, and there were.
Canoe you slide? Oh, you go.
No, just on the water. So because you know, because of very strong water, those roads are very slidey actually. So you don't need a canoe. It's almost like a free fall at some parts.
Wow.
So I hope now that you spent 3 days alone with your wife, you behaved like a gentleman, right? You only touched her hand.
Yes.
Good boy.
Good boy.
It was pretty amazing, really.
Are you preparing a third child? Are you begging a new one?
You know, to be honest, when you have only first child, okay, the first child is everything under control, right? So at that time you are considering to have 2, maybe even 3 or more, because everything seems so easy. But when you have second child after 1 year, then everything just collapses and everything is just going crazy, and you say no chance for third child. So I think that we are done. You know?
Okay.
And I'm sure that Stelios have the same views, I believe.
Yeah, obviously.
Yes.
And Steve's scared to death to do another one.
Yeah, but I might end up doing it
Yes.
actually.
Yeah, only because your wife will talk you into it.
I believe that he will have, but just when everything with the FA will be settled and under control, like maybe you imagined, so that you will have more time, because you definitely need more time.
Oh
when
yeah,
you have
for sure.
two kids, you know.
So Gregor, ahead of the US GDP, tell me, what do you like? I mean, what do you think? I mean, we are obviously, for example, in a triangle in the DXY. I mean,
yes,
you know, it's
clearly.
Yeah, clearly.
We are.
So I'm assuming that you're expecting a break higher. So you know, that would definitely come nicely if we got a nice GDP print today, right? I mean, it would definitely help in seeing the dollar break higher.
Yes, but after all, despite being in a triangle, as you know, triangles can also occur in a wave B position of a more complex corrective recovery or corrective setback, right?
Okay, so then get a C and then higher.
Yes, so until we get a confirmed breakout, it's still triangle summer trading range, you know. And so I'm really patiently waiting on this break. I mean, on the euro dollar to the downside, I'm looking at.
You want to show your charts, Gregor?
I just gave him the screen here.
Okay, you can see charts. Yes.
Yeah, got him.
Okay. So actually, you can see that this is a triangle in wave 4 that I'm tracking as a primary count. It's a 5-wave sideways price action, and it really gives you an advantage as an Elliott wave trader, because you really can ignore all of the ugly price structure ups and downs that occurred actually since June. Okay, so because you know that there must be 5 subwaves before you may consider to trading it, because you know that breakout will be sooner or later show up. Okay, so I have been on the sideline for most of the time on the euro dollar, but now when we are already counting 5 subwaves within this wave 4, I think that there can be a breakout coming. But as I said, we are still trading in the middle of the range, actually, looking back from start of June. So as long as we are above 1.1573, this triangle for a wave 4 is still not confirmed. So what I want to see is a decisive push below this level and a daily close below this bearish level that I marked as a wave D swing low. In such case, I would probably keep an eye on pullbacks, maybe even back to this trend line to look for shorts. But for now, looking for shorts here, it could be okay. It might be okay even last week, but it was not so clear, because I have also here the second count, which shows that this can be actually a triangle in a wave B. And here,
I was just going to ask if it could come out the other way, Gregor. Okay.
Yes, exactly. As long as that level holds, as
all right,
said, at 1573, because this level is the same swing like from this wave C in a triangle of a wave B. So it's summer trading, and this year, I mean, summer trading is the best possible scenario, I think, because as you know, summers can be very tricky, and in this example of euro dollar, this it's really presented in a very good way, actually. Why?
So
it's
you just go with the breakout.
Yes, you just go with the breakout. And
one thing is for sure, it's what I was saying yesterday as well. I believe that one way or another, we're going to get some breakouts finally. And, you know, today's GDP is very likely going to be the catalyst. And I do think that whichever way we break out, there is going to be some follow through. So I do think that, you know, people will be able to trade, you know, whatever, whatever technical event we get for at least a few days, the few days to follow. So I think from what I see, you're looking at the same thing, Gregor.
Yes, but as Dale said, you go with the break. I would just be careful if this break occurs to the upside, because
you would be more cautious.
Yes, because even if we go to the upside, I would still be looking for a move from May lows as a corrective, but just being more complex, which means that this whole corrective cycle that we are tracking could actually extend towards the end of August if we would see push higher into wave C. But at the end, it still should be a corrective movement, okay? Because we are tracking here an ongoing impulsive decline. So sooner or later, I think that this floor at 1.1550 will be broken. I'm still observing this bearish head and shoulders pattern. And but why I believe that sooner or later we may see a push to the downside is because of the cycle analysis, which I already talked about, I think that 2 weeks back or so in the webinar.
Yeah.
I said that here
So we've gone a little longer. We've gone a little longer,
yes.
Right? Yeah, okay.
Yes, a little bit longer, but if you consider that maybe triangle is completed, that triangle was completed here a few
Right.
days back already, okay? So this can be actually a starting point of this.
It could be imminent now.
Yes, so overall,
The longer they hold it, the bigger they fold it.
Yes, very good point.
Right?
And yes, and if you just look back where big previous move was, clearly was to the downside, so you are expecting again move to the downside as well, right? So I think that euro dollar is really headed to the downside, and that this 2017 trend line is just holding as a temporary support, and that we will see much lower prices ahead. Okay, so also I'm looking at other markets like Aussie is also very weak. I mean, for now it's just trading in the range, but overall it remains bearish from these 2018 highs, and clearly we have lower lows, lower swing highs within the downtrend channel, so even this support will sooner or later be taken out. And what is important is that this price structure again is not impulsive away from the lows, it's acting corrective. You don't see any aggressive moves to the upside. In fact, any rallies were clearly reversed very fast. So I think that we are trapped in a correction, and that we will see a break to the downside here as well. Though the one thing that is concerning is, of course, dollar yen. As you know, dollar yen has turned very aggressively to the downside. So if we consider bearish dollar yen and bearish picture on Aussie, euro, dollar, maybe
Aussie yen looks good.
Yes,
yeah.
And a lot of them actually looks good. I mean,
although Aussie yen is still consolidating. I mean, it has spent a considerable amount of time consolidating between 80.50 and 84.50. But yes, it looks like this can actually get resolved to the downside, in which case it might accelerate. So yeah, I agree with you. I mean, you know, potentially it can turn ugly.
Yes, very. And what is really the most important is that recovery here on euro yen clearly unfolded in 3 waves, right? Then we have seen a break of this trend line support, not a major breakout yet, but it looks like that a decline is already in 5 waves, right? So I think that we really should be considering more weakness after a pullback. I could label actually this one very quick here. Wave 1, 2, then wave 1, 2, 3, 4, 5 for wave 3. Then you have wave 4 here, and then you have now wave 5. So watch out for a pullback, and ideally we will see a push a little bit lower here for a wave 1, and then this trend line could act as a resistance very nicely for a wave 2 bounce. Okay, so definitely I'm looking yen crosses even more than other dollar pairs because of dollar yen, which, as I said, has turned very aggressively to the downside. It came lower actually impulsively to this trend line support. So maybe this bounce is now only a temporary for a wave 2, and we are going to see much lower prices. So if you are considering some shorts, then maybe watch out for euro yen before you're looking at the euro dollar.
I'm actually very curious, Greg, seeing, you know, the appreciation we've had in stock indices with your position that, you know, you were mostly looking for another leg lower has now changed.
Yes.
I mean, if you
I will take a look at the S&P. As you know, we were highlighting these 2 counts, but I'm still observing this as a one possible scenario for a reversal to the downside. At least temporary resistance, I think, can be seen at these levels. Okay, we have this wedge trend line that we are testing it right and also this parallel trend line of this upward channel for a wave P. Okay, and what is really important is that even if we are bullish, even if this leg from that low, which was June 28, is impulsive, I think that there will be pullback. Okay, so this is low, June 28, and you can see this move to the upside that can be labeled as an impulse. Okay, so let me give you an idea here. One, two, and then I would label probably this as a wave 4 triangle. Here we're wave 5. So let me also label the subwaves here. There's 1, 2,
1, 2, 3, 4, 5. I see them 4,
5. And then we have here
ABC. Yeah, ABC.
A, B, C, D, E. Okay.
Yeah.
You can see a triangle here. Now we are in 1, 2, 3, 4, and final leg push to the upside should be seen. So even if we are now turning bullish with this presentation here on the intraday chart, which clearly is bullish, okay, even if that ending diagonal is correct, then I should label the wave count a little bit differently, because in ending diagonals you don't have impulsive sequences, okay? But anyhow, what I want to highlight that even with a very aggressive bullish count, you would expect a pullback. So with that being said, watch out for an ABC retracement, which in such a case should take us back into this wave 4 area. So no matter in which
roughly back to 2800. That means roughly.
Yes, and that's actually, if we see another high, we may see 60, maybe even 70-point drop, which is a lot actually for the S&P for summer trading, right? So I'm still very curious what will happen here, and if this will prove to be correct, then yen crosses will see even more damage, because yen is already showing its trend now when stocks are still bullish. Okay, so if we see a risk off, I think that Japanese yen will see just even more gains ahead.
If we assume that the bearish scenario, because what you're talking about now is the bullish scenario, which yes, it should yield a pullback, even if we consider the most bullish scenario, as you said, and we agree. But let's consider that perhaps the bearish scenario is still valid, and it does play out. The Nasdaq though has a different structure. I mean, the Nasdaq has been pushing new all-time highs for some time now. I see there the potential of an ascending wedge on the whole structure. But how would you then label what we see in the Nasdaq? By the way, I'm going to interrupt you when the time comes, because in less than 2 minutes we have GDP. But sure. I'm going to tell you, don't worry, I'm keeping an eye on it.
If I look at Nasdaq here,
yeah, it looks like an ascending wedge to me, the whole thing.
The whole thing, yes. But we are then, if that's the case, okay, then what we should see is a fall back into this, back below this upper trend line. We are now in a throw over formation, so if we fall back beneath that, then this could be formed as a top.
Greg, this depends. What if you ignore the previous high and you take the high before that? So actually, if you drag the beginning, yeah, exactly, and now, yep. And now, no, take into account the second peak. So pull exactly. So what if this is the case?
If that's clearly could be the case, in such case, this should be labeled as an ending diagonal, which means that the drop would be would put a lot of fear into this market, because it's no ending diagonal.
That's actually how I'm viewing this market so far. Not like my main case scenario, but I do consider it a likely scenario. I mean, this looks, in any way you look at it or slice it, it does look like a very nice.
Yes, and what is also interesting, that markets are moving higher, the stock markets now during summer trading.
Can you switch to the USD yen? Let's see.
And Greg, if it is an ending diagonal, it should be able to take up the Jan low.
We're getting GDP print in seconds. So let's first check what's going to happen here with the GDP print.
Expectation is 4.1, but after
4.1
comments, probably more like 4. Yeah, more than that. Let's see.
Any second now.
4.1.
4.1, exactly as expected. So that's going to be interesting. Let's see what the market does now that we got exactly price index failure. Do you see that?
Yes.
GDP price index 3.2. versus 2.3 expected. So that blew off the roof. This is another print actually that shows us that we have inflationary pressures, right, Stelio? I mean, everything we've been getting from the US lately, everything. Let's remember, and let's see what the market is doing actually as a reaction. So far, not much actually. The market doesn't know how to interpret this because it was exactly what was expected. So the market has a little bit stalled, but definitely one thing is for sure. We've been getting, even taking into account the distorted way of measuring CPI, we already have a CPI print that's almost 3%. That's like almost 50% higher than the Fed is targeting. We have a PPI print at 3.4%, which shows that more inflationary pressures are building. We now got, the price index at 3.2 versus 2.3 expected. So, that's definitely something that we should take into account. Still, no reaction yet. I mean, everything has moved more or less mid-range.
You're getting something in the metals. They were down hard and they're recovering pretty good.
Yeah, speaking of that, and I'm going to keep monitoring everything. So, Gregor, you can go on finishing up what you were saying with Nasdaq. We were talking about the ascending wedge scenario. I'm going to keep monitoring. I'm going to interrupt you if something starts actually moving.
Sure.
But until then, we have no reason to stop what we were saying because so far nothing is moving.
Regarding Nasdaq, as you said, it can be an ending diagonal, or you can also label this as a 5-wave recovery from here. 1, 2, 3, 4, and wave 5. Okay, so even different interpretation may
still would point
that the
lower initially. Yeah.
Yes. So buying here, I think it's too expensive overall.
Actually, buying here is too expensive. Trust me, something that is going to look like an underestimation in a year from now. Any way you want to interpret it.
You never know.
Yeah.
Here's also that DAX that I'm tracking. Now we are in ups and downs. You can see actually since 2017 now for 14 months or so. So actually no real direction, but I think that this can be a triangle. So as we said earlier, it's a 5-wave structure, A, B, C, D, and T. So maybe US stocks will come a little bit lower when we see also DAX hitting or completing this wave D. And what is really interesting is that here in the middle of this recovery that I'm tracking, I see a triangle. Okay, and if that's a triangle, then we know that current break or push to the upside is final within this sequence, because triangle occurs prior to the final move within the larger trend, which is at the moment is up, looking from June 28 lows. So I think that resistance may not be so far away. Also, there was a gap, as you can see here, from June 18th. Okay, so we are always, not always, but normally all of the gaps are getting filled, and once they are filled, new flows will occur because of unfilled orders, which will change the direction of the trend.
Let me help you out here. You have targets roughly there. You have the 161.8% extension, etc., etc. Let me add to this that if you draw a fib, you also have that gap, as you said, but also if you draw a fib from the high to the low, you'll see that also the 78.6% fib is at 12,949. So we have another area of resistance, more or less, in the same area there.
Okay. Yes, you mean around?
Yeah, there.
A little bit higher, yes.
Yeah.
Yes. So actually, this is the gap, the first gap that we are testing. I know that this was the real gap. I'm just not convinced about this gap that I also see right now from June 15th. Okay, there was another gap, as you can see here. So maybe even we see a push towards these levels. But what is really important, as I said, that gaps, once they are filled, unfilled orders get executed, and that's why flows can change. And normally, this causes a reaction to the opposite side, which means in our case to the downside. So I think that we may see a reaction lower into this wave E, maybe in August, and that's also maybe a perfect timing when we may see a reversal or at least temporary resistance to hold on US markets.
I know that a lot of people are monitoring and are trying to catch reversals on metals as well. Personally, especially gold and silver, they don't look healthy to me at the moment. I mean, in the short term, I would still be expecting weakness. What do you see in the metals?
In metals, actually, I expect at least one more push to the downside.
Yeah, that's what I see as well. I see that the next move has to be to the downside from the short-term price action.
Yes, this is silver 4-hour chart. So it's 1, 2.
Yeah, I was viewing that as a flag as well, as you have it there.
Yes, and now it looks actually like a nice push to the upside. Now, current reaction higher is just news related, maybe, and I would not be surprised if we see a reversal or continuation to the downside. Which day is today?
Sorry, again, mate. Yeah, it's Friday the 27th. It's nice being on vacation, right?
Yes. Because I almost said, okay, maybe we will get and push to the downside by the end of the week. So
yeah,
maybe
it has to be fast because a few hours only are left for the week.
Yeah, but you never know, you know. Silver,
yeah, that's true. That's very true.
Can be very fast. But generally speaking, yes, I'm expecting more weakness here, expecting drop for a fifth wave here on silver. If we take a look on gold, very similar case here on the 4-hour chart. This is a recovery corrective. This channel or resistance line, which I think is very important for these intraday swings to hold to the bearish side, remained in place. So I think that here at least one more push to the downside is coming.
And what would you expect from a recovery afterwards? Because you now showed us like a very short-term picture of in a 4-hour chart or whatever. But what kind of a rebound you think would follow that?
I think that after we see maybe another lows here and to retest this July 09, 2017 low, I think that we may see a reversal to the upside in 3 legs, because I'm tracking this as an ABCDE triangle formation.
That could take us how high, roughly?
What I would be looking at, if we go a little bit lower, ideally we will see a move back into the middle of this triangle range. So if we consider that wave D could see a little bit lower prices like that, okay, then I would be looking at for a move into the middle of a triangle, like a pivot resistance of this triangle, and this could be around 1250 up to 1280. I would be looking for wave E to complete here and then move to the downside. At the same time, we may see a new recovery once this wave E gets underway, a new recovery on euro dollar as well.
By the way, the dollar has strengthened very, very slightly since we were speaking, but really the market is still almost completely unfazed. I mean, if somebody didn't know that, we had major data yesterday and today, just by looking at the price action, they wouldn't have assumed that, we had, nothing is really moving so far. Ranges have been, have been staying at, a very minimum.
Yes, I can see, yes. So from a trading perspective, as I said already earlier, I think that this triangle and dollar index are really the leaders of what is going on this market during summer. So if we see a major break out on euro dollar or dollar index, whatever, then I think that it can be time to look for some positions on dollar pairs. Otherwise, I would just stay focused on Japanese yen.
Okay. What about crude? Crude tells me that it has at least one more push to the downside. I mean, I see this like a little triangle consolidation. I think there is at least one more leg of weakness before the bullish trend can reassert itself. But how do you view crude at the moment?
Now, if we look at this recovery from the last 2 weeks, we can see that there were no any sustainable recovery. There was always some pullbacks. Yeah, so I think that this is just WXY correction, it's more complex correction, which means it's deeper and it takes longer to unfold. But ideally, we will see a reversal to the downside while we are approaching this resistance of a former wave 4 and 61.8%. So I would not be surprised if we see a new leg, as you said yourself, to the downside.
Yeah, my target is 66. 66 is triple confluence of supports, actually. So 66 extremely key level.
Yes, but it can be a lot more damage done here if
of course. But
trend line,
at the
of course, would be broken.
At the very minimum, my minimum expectations would be to hit 66.
Yes, and technically speaking, I'm bearish on crude as long as we are trading below those June or early July highs.
Should I interpret that you are expecting? I was actually short. I booked half of my short position because I'm thinking that it might resume to the upside, and then I'm now talking about USD CAD, and let's talk about USD NOK as well. So let me guess that, especially if I see that you're being more bearish in your expectations having to do with crude than I am, because I'm just focused on 66 at the moment, which isn't that far away. But from what I see, you think that we might have a lot more weakness coming in crude. So should I assume that means that you have a lot higher targets in the USD CAD and USD NOK?
I think.
By the way, USD NOK, since you're looking at it from a basic technical analysis perspective, this looks like a triangle which broke to the upside. We came down, we retested. Yeah, exactly.
Yes,
like this. Yeah, we retested it, and now we seem to be moving higher once again.
Yes, and with everything what it has to do with dollar, where overall I'm expecting stronger dollar, I'm expecting lower crude. So as you said yourself, dollar NOK could easily move to the upside, and from an Elliott wave perspective, this could be counted as a wave 1, wave 2, this wave 1, 2, 3, 4, 5 for a wave 3. And now maybe that was a wave 4, and we are moving to the upside. So maybe even this can be interpreted like a leading diagonal in progress. Okay.
So for a large wave 1, you mean?
Yes, exactly.
So you're expecting potentially, yeah, because if especially this is a leading diagonal, we would be talking about a lot more upside.
Yes, and actually I have dollar NOK here. Okay, here it is. You can clearly see here that on dollar NOK, okay, there was just a temporary pullback to the downside.
It looks corrective indeed.
Yes, clearly. So big picture, I know that these are very tough calls, okay, on a longer term, but to be just to respect what the market is doing on the longer term chart. As an Elliott wave technician, for me it's the same thing looking at the weekly chart, monthly chart, or the 15-minute chart. If that would be a 15-minute chart, and I would say that we are going to see a new high here by the end of the US session, for you that would make sense. But looking at the weekly chart, everyone are thinking about twice, like, do you really think this can go to the upside? But technically speaking, no matter on which cycles and which time frames are you tracking, structures are the same. Okay, so I'm expecting more upside, looking for wave 1, 2, 3, wave 4, and expecting push higher into wave 5. Actually, wave 3 and wave 4 are missing here. And actually, dollar CAD, I can also look at the dollar CAD very quickly. Dollar CAD, we have very similar.
Stelios is writing that he hates us both because he likes USD NOK lower.
Yes, no, and just he probably don't want me to look at the silver longer term chart.
No, I do want you to do that though.
Yeah. He said that he will sell his house and everything if silver will be trading at 10, so that he can buy silver.
Probably I'm going to be doing the same.
When you do technical analysis or wave analysis on silver, you are making a huge assumption you're assuming that the money supply and credit supply is constant, which it isn't.
No, you're wrong, State. He makes no assumption because Gregor is purely a technical trader. He doesn't care about any of that.
Yeah.
And trust me, that's not a disadvantage. I'm not saying it as something bad. He's looking.
Yes, I'm not looking at fundamentals because I would try to line up everything with fundamentals. They're probably more, my technical calls. A lot of them from the past would be completely different.
Yeah,
no?
they would be skewed, and many times that would lead because just think about it, Stelio. How many times have we seen the market do things that, based on fundamentals, they make absolutely no sense whatsoever, right? No sense.
Very often. I stand by my call that if we get to 10, I'm literally selling my house. I'm not kidding.
I'm probably going to be selling my wife and son as well, to be honest.
No, I don't know. Who thought maybe that when crude oil was trading at 110 that it will decline towards 25?
At 26, yeah, to 26
or 26. You know, there are always repeatable cycles through history, and
of course,
it's very interesting that we are always surprised, you know, because these are very huge cycles, and it takes us for long to get realized that this was a very bearish cycle. So at the end of the day, we always recognize it too late, you know, because it's, I don't know, psychologically oriented.
Very true. But you know, especially in big cycles, it's very, very easy to start getting the warning signs that they're almost over. For example, just remember the absurd speculation that we had when crude was trading below 30. You know, we were starting reading some BS stories like why crude can go to 10, why crude can go to single digits, why 15 is the next level of support. And, you know, when that starts happening, you're like, yeah, nope. You know, probably this is the time to be looking higher.
Yes. So actually, why I'm looking at always for the markets like in technical analysis and not so much with the fundamental view is because fundamentals through history, they try to change, and you always learn something new, and you always have to understand it from a new perspective. But technicals, old schools will always try to remain the same, and you will always stay on the same track. And also fundamentals, even if you are going to the best school of economics, there is no way that they will teach you fundamentals and they will teach you how to make money. You will still have issues to make money with fundamentals, even if you are the best at them.
As a single tool, the only way that you can trade just by using fundamentals is being extremely patient, using very low leverage, right? And having a lot of time ahead of you to be proved right. I mean, remember that even the few speculators that were actually 100% convinced that the housing bubble was a housing bubble, they had to endure being wrong for 2, 3, 4 years, right? And they were 100% sure that they were right. But still, I mean, they had to go through a lot of stress, paying a lot because they kept being short a market that had a negative carry. So yeah, as I said, I mean, it's a totally different thing to do. Now, having to do with what you said, Gregor, let me remind you that there is a saying, and that's why the Fed keeps failing, by the way, and it will keep failing, among other things, is that generals are always prepared to fight the previous war. This is because, as human beings, we always make the very often mistaken assumption that exactly what we got the previous time is what's going to happen again in the next time, right? That also explains what you said, that, you know, we make assumptions, we believe that we know, you know, what's up ahead, and then something else happens, and that's why sometimes ignoring fundamentals and going with the technicals is probably a better guide if we're talking now simply about trading, right?
Yes. So.
Okay, so
Gregor, what was the first book you read on Elliott Wave? Just curious, and a guest is asking. What book you recommend?
Elliott Wave Principle by Frost and Proctor.
Okay. So there's their starting point, Abdullah.
It's the Bible. Yeah, it's like the Bible.
Yeah. Okay.
Yes, but it's very, this is not kind of a book that you will just go through and to read. What I recommend always is just, and how I did it. Wait. And how I did it is that actually I always read chapter by chapter, and because it's so many things, I always put down my notes, and I was looking for different structures that book described. I was trying to find those structures in the live market charts. Okay,
nice.
So there was an impulse, and they said impulse is a 5-wave recovery where wave 4 does not trade into territory of wave 2. I opened my chart and was looking and searching for those patterns, and then I printed them, and that's how I learned and everything remembered, because otherwise it's just too much information. There are too much structures, too much personalities and guidelines to remember them. So
small
that's
bites. Small bites.
So you have to go, yes, exactly, step by step, and put everything down.
Basically, what Gregor says is that, just by getting a university degree, or in this case, in general, theoretical knowledge, doesn't make you qualified, as a professional. Because, it's a different thing reading 1, 2, 5 books on Elliott waves and, now having a grasp of, how in theory it works. And it's a different thing getting yourself down, trying and trying again on actual charts, seeing which times you make a mistake and why that happened, and then training your eye to immediately, avoid some of the usual traps, because, some things can be interpreted one way or another, etc., etc. Now, if you've seen many times that we've asked Gregor to make some kind of an analysis on a chart that, he has no analysis on, he can make it on the fly. While, if you don't, if you just have a theoretical knowledge, it might take you a lot of time, and you would still probably get the wrong, the wrong interpretation. So,
I like that Gregor almost always has an alternate count, so that he doesn't get too attached to one outcome. It makes him flexible.
Yes, and for some Twitter followers, as I saw, it's very hard for them to understand. For example, I was looking at Bitcoin when it was trading at 5,800. I said that there is possibility that we will see, based on a wave count, of course, that we will see 5,000. Now, a few days back, actually week back or so, I changed my view, and I said, because of the reversed price action that we have seen on Bitcoin, a nice bounce to the upside, we can see 14,000, 12,000. Okay, and he said, well, you were looking for 5,000, now you're looking for 12,000. Well, and that's really the advantage, that I'm listening to the market.
Right.
It's not the market that will listen to me, So I have no issues to go with the market and change my flows, because the sooner you will recognize that you are wrong, the better will be for you to step in the right direction.
Yeah, well, that's my favorite saying from W.D. Gann. If you don't learn how to change your mind, you won't have any change left.
Yes.
If you got to, new information, you always have to be processing the new information you're getting.
Yes. So for me, it's also sometimes I said, if someone asks me where this market will go, I don't care. If I don't have bias at the moment, I don't care. We will see, and I will recognize the structure when market moves, and then I will go with it.
Hi, William. By the way, we have a request here. I have a good view on the USD Singaporean dollar. It was a very nice descending channel, and we've now broken above it. And we had a consolidation after breaking above it. Then we broke higher. Then we have another consolidation above it. You passed me the screen. Let me show you, Greg, and tell me from an Elliott wave perspective what you see here. This is the USD, because we have a friend here asking. This is a USD Singaporean dollar. Let me zoom out so you can see the whole picture here, right? So I was tracking that, very actively, because at some point we started trying to bottom, then we broke above this. And as you see, now we seem to be in another triangle. So I think that, another resolution to the upside looks likely here. Do you have anything to add? Would you want me to show something different? But in the short term, I think that the next move might be to the upside once again.
Yes, it's looking like a triangle. Maybe now we are in wave ABC, wave ABC, wave C, expecting bounce into wave DE and then more upside. This could be actually wave 4 of a bigger wave 3, looking from the low of 2018.
Yeah, okay. So you agree that likely more upside is coming after a breakout from here, right?
Yes,
okay.
If you're just generally speaking, looking at these price structures from 2018 lows, we have seen a move to the upside, sideways correction triangle, move to the upside, sideways correction, move to the upside. Yes, so there are continuation patterns, and which means based on possibility, there is probably better probability to see.
I pass you back to the screen because Dale wants you to have a look at the Euro Kiwi through obviously an Elliott wave perspective.
Euro.
All those pairs are currently consolidating, by the way. So the question is where to next? All Euro, Aussie, Euro, Kiwi, Pound, Aussie, Pound, Kiwi. All of them seem to be in consolidation during the past several days.
I mean, here on
we can see your screen.
Dollar. You can't?
Okay. No, not yet. At least I can't. Oh yeah, now I can.
Okay, so we have seen a move to the downside, and now then a nice, very sharp, aggressive rise. And what is probably the most important, that we are now moving sideways. Okay, so even if you ignore what happened before June 18th, okay, I think that the most important is this part. Very strong move to the upside, and now slow price.
Slow consolidation. Yeah, exactly.
Yes.
That looks like it wants to break out.
Because corrections are slow, they take time, they are made to confuse traders, and in such case you just look back, where was the previous very strong reaction? It was to the upside. So would be expecting more gains after wave 4. Now here I have also 4-hour chart. Maybe this is an ABC move to the downside with a triangle in the middle. So the support ideally is at this lower trend line. Okay, parallel trend line. So actually you. Okay, just a second.
He's right. Tell him.
So it's Vit, my son, watching.
Yeah, good.
Some cartoons. So actually, you make a corrective channel to connect the starting point of a wave A and of a wave B, and put the parallel line at the bottom of wave A, and this is actually the support where ideally market will turn to the upside. Of course, you want to see a reaction first before you go with the flow.
If you
but
see
ideally,
euros,
that would be my bounce zone.
If you see euros,
and also 1.7 as I see right now, it's also psychological level. So for now, more weakness and then turn to the upside.
If you have a look at it, Grega, euros is also textbook in my opinion. So if you switch to it.
Okay, just let me. We have, okay, what is now?
You're in Eurocad.
We have interview as well? Or no?
Yeah. We do,
okay.
we do.
Norm's not here, so take your time.
So euros,
trying to find him.
Euros, I think it's quite a textbook consolidation here as well.
Yes,
right?
It's actually very similar.
Yeah.
Maybe this was impulsive reaction to the upside.
Actually, regardless of the noise, Grega, if you only take into account the daily closes, you'll see that the euros is trapped between 157 and 159 because the rest are just intraday noise.
Yes, so it would be something like that probably.
Yeah, exactly.
Consolidation clearly,
yeah.
But be aware of a spike lower and then turn to the upside. But what I don't like is the previous recovery was not that clear. So maybe there are some better pairs out there. But overall, if euro dollar is really going to get this broken bearish head and shoulders pattern, then I'm really wondering what that means for other euro crosses as well.
Yeah, but for the time being,
that's kind of like your highest conviction chart and count that you see right now, isn't it?
the Euro USD, you mean?
Yeah.
George?
Yes.
Yes, of course.
Okay.
Yes.
Okay. So USD yen, you also think lower, Grega, from what we saw, right? So you do think that the next move is lower as well?
After a bounce, after a pullback, yes, more downside.
We're at Greg about 1220. Would that be a good area? 12 to 1220. 112 to
For
112.
dollar yen.
Yeah, to sell it.
Always when I track corrections, I would look for minimum towards 38.2%.
Oh, that's
then
11.50.
ideally 61.
Okay. Yeah.
This is, but
38.
ideally, as you said, 112. That would be ideal, probably.
Yeah. Yeah. Okay. Thank you, buddy. And you're looking for what, 107-ish down the road?
For a pullback, if we are really
yeah.
tapping into wave E, then
Yeah.
there are room for 108.
Uh-huh. Okay.
Because after all, we have turned from, I was expecting a little bit higher prices, to be honest, here for wave D. But since we got a rejection down from this trend line resistance, and if we respect what the previous cycle has done, always when this trend line was tested, we have seen a quite nice move to the downside. So maybe something similar will happening now.
So that could be a great position long around 107, 108. Because look at where C is. I'm way up there.
Yeah. Yes, but again, after we get a confirmation, which means breakout point above wave D.
Right.
Similar, like I said, with
Euro.
Euro dollar.
Okay, buddy.
By the way, Greg, William is asking for silver. Did we actually explicitly show the silver chart? If yes, he can go and see it in the recording. Yeah, actually, I think we did. You're expecting one more low at least, but we didn't discuss what kind of a rebound you would expect afterwards.
Yes, as you can see here, for yourself, I'm looking for a wave E. Okay. Bouncing. So, after a new low, same like with gold, I'm expecting a wave E. And then, okay, this is the old count, or I have it here. I don't have it. This is old count. Let me just update it here. So wave D, this was wave C. So I'd be expecting wave E bounce and then turn to the downside. A real breakout. So is Stelio still here?
Stelio?
Is Stelio still here?
I am still here.
Yes.
Yes.
Do your worst.
You just
$11.
I would look.
I'm buying
for
it
12 to 10.
Okay. I'm putting on buy order now. $11. Okay. Thank you.
Yeah, I put a limit. Make it a GTC because it may not happen today. You don't want to have to keep putting limit orders in every day, you know?
But actually, even if you look, we were at this level, around 10. It was not so damn back. It was what, 10 years back?
During the crisis. Yeah.
Yes. So
yeah, but if history teaches a lesson, what did the last guy that bought at 11 get? he got priced back at 50.
You had silver at 11 with the US debt at less than $1 trillion, and now it's at 20. You do the math, you know. But anyway, I get it. You know, I might get there. I might go there. There's no problem.
Stelio, can you put in the chat? There is a friend here asking, is there a recording of David Brady's interview from yesterday? Of course there is. There are always.
I'll find it and I'll put it on the chat. Yes.
Okay, perfect. I'll also tell Velo to retweet it actually as well. But you do that as well. I'm going to write to Velo because it was a very, very interesting interview. Is your guest here, Dale?
Dale.
I think that Norm may have overslept because I went to both of his Skype, so I'm calling it a cancel as of now.
Okay. So, Grega, before we call it a week, anything else in your radar that you would want to talk about before we call it a weekend?
No, I would just be looking for Euro-Yen pullbacks, waiting for this wave 2. I would be waiting on also tracking Pound-Yen pullback. Also, I missed, unfortunately, and I was looking it for quite some time, but I was away for the start of this week, but still think that there can be an interesting setups ahead. EuroCat, this has broken nicely to the downside here, yeah, so maybe watch out intraday pullbacks here, maybe just for a wave 4 to catch wave 5 to the downside, because current decline is still not in 5 waves.
That looks
wave
like
1, 2,
big one.
3, 4, 5. So I'll be looking for pullbacks into wave 4 early next week, at least for one small push or trade to the downside. And on euro dollar in general, as I said, I would be expecting a break out of this range, but will wait on the shorts. I would never buy this market, okay, euro dollar, because I think, as I said, it's in consolidation. So expecting sooner or later to resumption lower, but just need confirmation that we are really finishing this sideways pattern. For now, it's still not the case. Perfect. So actually, that's all what I'm tracking. And also crude oil, as you said yourself, another
like
back
the
to the downside.
Yeah, at least. Yeah, that's very true.
That one is also very clear.
I think it's time we all go to bed because the market seems to have fallen asleep already. Nothing is moving. Okay.
Well,
so
wait
actually, I can sound. If anyone is wondering, what is canyoning, now this is canyoning. You can see.
So you just go down on your butt.
Yes, and it was a waterfall like 26 meters.
Wow.
Whoa.
So is there like a lot of algae on the bottom of it that makes it slippery for you just to slide down it? Because in Arizona they have a place called Slide Rock, and you can't even stand on it in Sedona because it's got all that green algae in it that makes you slide on it. So
yes, it's also very similar here, but it's easy to come out, and it's water is also enough.
You have a wetsuit on, so the water was cold, huh?
Yes, water had what, 10 degrees or so. So that's probably the clearest water. It's to mean that's what, 2 hours of my local tone. So this is Tolmin. You can see that the water is probably the most clear that you can get.
You're an outdoorsman. Yeah, you know that rock, that one picture you just had up there looked like Slide Rock in Sedona, where people are diving off the rocks into it, and rope swings and things like that. Fun.
Yes. It's really interesting. It's really interesting that here a lot of my friends and everyone are not discovering our local stuff so much. Everyone tried to go abroad instead of discovering your adventures here. So that's so you really should know your own country first before you go outside, because I believe that
keep exploring it. Once you're ready, tell me. I'm going to book tickets for the family and we're coming. You're going to take us around.
No problem, mate. No problem.
Yeah, the whole team is good. Steve's booking tickets for.
Yes,
I knew
even Blake's wife said that she want to visit Slovenia as well. So.
Oh yeah.
Perfect. So thank you very much, guys. Let's hope that something happens during the rest of the day and we don't have to fall asleep.
Maybe once stocks open, there'll be a little bit more movement. Looks like that's where the action is. Yeah.
So no interview.
No
interview. We had you.
Guys.
We can't ask for more.
Yeah, you were a great interview.
Thank you for having me.
Yeah.
Yes.
Thank you,
Greg.
Greg.
So Face guys, thank you, Greg. Face. Have a great weekend. Do your work. Get ready for next week.
perhaps we have a little bit more action. I think that if you're in Africa or Europe, we won't see it in the US, but you could go out and check out the lunar eclipse. It's a total one. It's pretty cool. I always, really think it's beautiful to see how cycles and everything work, and an eclipse is a manifestation of a cycle that has been going on longer than people have been trading Forex. So with that being said, don't just count your pips, count your blessings. Have a great weekend. I have a great lineup set up for next week. Hope you enjoyed David Brady yesterday, and we had some nice guests here, and that we're adding value to what you're trying to accomplish. And as everyone's leaving, Friday's a great day to become a subscriber. And Friday's also a good day to call our sponsor at Forest Park FX and find an account that suits all of your needs. You don't have to compromise, because there are many brokers out there with different types of business models that may suit you better than the one you have. And sometimes you need to have more than one account to have a comparative view as to where you want to give the majority of your business. And if you do it with one of the brokers that Brent sets you up with, Trent, excuse me, Trent sets you up with, it can pay for your subscription here. So that's a wrap for me. Have a great weekend, everybody. See you, FA team. Adios, amigos. Shalom Aleichem. That means peace and love.